Hello, BDL Advisor clients. Jeff Brown again, April of 2023, and welcome to the Oculus. So we've given this a name. I had a client say, hey, you need to name this something. So we're going to call it the Oculus. Why the Oculus? Oculus means eye. So we need a clear view of things. Really important when it comes to investing your money. The Pantheon in Rome, I love the Pantheon in Rome. In the top of the dome is a 27-foot diameter hole in the dome. There on purpose. By design. When you're down on the floor, it doesn't look nearly that big. So if you ever get a chance, please go there. I put a link in there as well to help you understand the Pantheon more and how it was constructed. Really interesting. This month, we're going to talk about the stock market. You know, I like the bond market. When yields go up, you should invest in bonds. That just makes sense. Yields go up, you want to lock in high yields in the bond market. But don't forget about the stock market. Really important. Earnings drive stock prices over time. And I put a chart in here. It's one from before. What are the earnings projected to be? Well, the last 6 months, the stock market has done pretty well. If you look at the earnings, they've really hung in there. They're doing okay. Look at that long history of earnings. And then don't ask yourself, again, why the stock market prices just go up over long periods of time. It's because the earnings go up over long periods of time. Doesn't mean it's going to happen in the future, of course. We always have to say that, but that's what's happened in the past. The other thing I put in here is something on mindset. I think that's so important. You know that. The mindset of the consumer today is very poor, okay, very pessimistic. So we have a lot of consumer sentiment measurements out there. And right now it's measuring pretty low. Well, look again, historically, when consumer sentiment is low, when it troughs, what happens to the equity markets after that? It's quite surprising. Remember, the markets are predictive. They look forward, not backward. Like I said last time, don't drive your car looking in the rearview mirror. In our business, we say if you torture the data long enough, it'll tell you anything. But these are two really simple data points to look at. Earnings, okay? Prices follow earnings, and then consumer sentiment. What happens when consumer sentiment is so bad it can't get any worse? Well, typically things improve, and then market prices have typically improved from there. They're pretty simple to understand. If you have any questions about that, feel free to give us a call. We'd love to hear from you. Thanks.